Hey everyone, welcome back to another Market Open live stream. So what do we got today? We've got the Dow right now set to open down about 0.59, S&P set to open down 0.54, and NASDAQ down 0.56. This is ahead of tech earnings, so a lot of potential excitement brewing for what's to come with Google and other earnings that we've got this week that would be pretty big. We've had some earnings this morning as well, which we'll cover. We've got the 5-year break even, market's inflation expectation down to 3.26, which is another little drop from yesterday's decline, which is great. We've got the 10-2 for the yield curve. Still kind of sitting around that 18 to 19 basis point region, so it's definitely flattened a little bit. And then let's get into some of the other news that's going on. Obviously, yesterday, Elon snagged Twitter. We'll have some updates regarding that. Mostly, there's a lot of talk about China, though, still in supply chains, about how really it almost feels like, to some degree, supply chain issues are almost worse now than they have ever been before, which is kind of crazy because you would actually think things would end up getting better, not worse. But that doesn't appear to be the case, especially when a country like Germany says they get, 50% of their businesses get more than half of their products from China, which was pretty wild. That's a lot of reliance on China. So the questions regarding China, especially with them accounting for 12% of trade and already being backed up with COVID backlogs, makes a lot of people kind of scratch their heads about when is this transitory inflation actually going to end up proving to be transitory. So in terms of how bad, let's see, right now it takes an average of 111 days for goods to reach a warehouse in the United States. This is down from a high of 113 days. So we've only gone from 113 days to 111 days, which is basically means we're still at record highs. Europe takes even longer. We're at record highs over there of 118 days to get from China to Europe. And vessel queues, how many ships they have there, is 35% higher than what you would normally expect. Oh, and of course, how long it would take to get to a factory ordinarily is taking twice as long as it usually does. Imported containers are waiting an average of 12 days at Shanghai before they're picked up. This is almost triple the 4.6 days we had prior. So when you look at sort of the statistic, you end up getting a little sad that wow, things aren't actually getting better in China, and the COVID lockdowns don't help. Especially since the Economist ran a piece yesterday talking about how China's COVID lockdowns are probably killing more people than COVID itself. And you'll notice when China talks about COVID deaths, they don't talk about, this is how many people died from COVID. It's always, these are the COVID-related deaths. In other words, like you died from something while having COVID, right? We saw that kind of same nonsense happen in the United States too. And China is no exception, but it's probably possibly even more severe over there. In the meantime, executives, and this is something that we've been talking about for weeks now, and it's come as a surprise, but we've been talking about it for weeks, and that is that corporate executives are touting the strength of U.S. consumers in the face of surging inflation. And that's so critical for preventing this sort of recessionary fear. It's that the consumer keeps spending. You've even got, we heard that from JP Morgan. We heard that from Amex. We heard that from the travel sector, from Delta. We heard that from Bank of America, card spend data, strong spending and recovery, travel, entertainment, more spending than what we had previously, which, get this was an interesting one. In March of 2021, we had just gotten the American Rescue Plan, which obviously was that was the $1,400 stimulus check. Remember that. We had a $1,200 stimulus check in March, April. It was April 2020. Then we had the $600 stimulus check in January of 2020 to 2021. And then you had a $1,400 check in March of 2021. And still, listen to this, spending was 13% higher by dollar volume and a 7.4% increase in the number of transactions. Now, I know there are some people who are like, oh, but Kevin, that's because things are more expensive. No, it's not solely that. And I've made this analogy before, but I'll just make the comparison again. If you have $100 to spend, and you can go buy stuff with it. Maybe you could buy 10 widgets, whatever, because they cost you $10 each. If you have inflation and those now cost you $20 each, well, now you're only buying 5. So you get less stuff when there's inflation. And if you then choose to pay more, that means A, you had more money to spend, and B, you are willing to spend more money. Obviously, if that is related to gas and essentials, well, that's generally where we have to kind of cut back use of essentials. But this spend is not just about essentials; it's about everything. We were spending more on everything, no matter what inflation is doing, and that's just a sign of more money, right? Then you've got there was some murmuring from Bloomberg that maybe Elon Musk is richer than the world thinks because maybe he got into crypto earlier, and maybe this is how he has a bunch of extra cash they're not able to account for through public filings. I don't know. That to me just sounds like pure speculation. We know Elon's mentioned that he's got exposure to Bitcoin, Ethereum, and Doge, but he kind of implied it was really small, but who knows? Maybe his initial investment was very small. Then what else here? Okay, so we talked about China. Oh yeah, the EU's kind of preempting Elon Musk already, saying that if Elon Musk doesn't moderate Twitter and follow the rules properly, then they'll ban him, and they'll ban Twitter from Europe. It's like, really? The guy's had approval on the company for a day, and you're already being a Karen. Anyway, many Twitter employees have more than 50% of their compensation coming from Twitter stock, by the way. Russian forces have, in the south and eastern regions, obviously been more aggressive. But one of the things that's interesting is they've taken control of Kyrgyz, or the Kyrgyz region, and they've taken control of the city council and have now declared independence, the Russian military, and they're calling it the Kyrgyz People's Republic. Zelensky calls it a sham. It's kind of interesting seeing the Russians really go with the whole angle of, oh yeah, we're liberating you here. Now you're liberated. Let's give you a new government. Kind of crazy. Also worth noting that statistically, at least according to the Financial Times, there's some talk about how crypto has moved since the Super Bowl, and kind of how much of a bummer it is that it actually hasn't moved much. But it's actually institutions that are selling more than retail investors. In fact, I got the piece right here. And so I thought that was kind of interesting that this year they say the Super Bowl was really more than just football. It was all about crypto. And remember, I mean, they held it at the SoFi Stadium, which also does crypto. You've got this insane amount of advertising, especially from companies like Crypto.com, FTX. I mean, these companies are spending money absolutely like crazy. And yet the Financial Times is like, how did we advertise so much? It kind of still see this slowdown in crypto prices substantially from 69,000 in November to 33,000. I do personally think they kind of missed the point that prices have been moving to the downside because of, well, the same reason stocks have been moving. It's not like we just advertise stocks and prices will go up, but I think people like to find ways to poop on crypto. Anyway. So, okay, what else do we have? Well, oh yeah, earnings. Okay, now we're going to talk about earnings. Quick note, though, this video is brought to you by StreamYard. You want professional live streaming software where you could throw up comments like this one here that says, since I am here. Make sure you go to metkevin.com/StreamYard to check out professional live streaming software with StreamYard. Throw up the comments, multi-stream to different platforms. Excellent platform. I've been using it for years now. It's great. Okay, so UPS beats. UPS comes in with a Q1 EPS of 305 versus 288. Fiscal revenue of 102 is the forecast, and that was also in line with expectations. Let's see. Let's see how the stock's moving. We'll get some other notes here. Stock's up about 1.72%. You've got, let's see, double buyback target in 2022. UPS plans to double the amount of share repurchases. Yep, we got that. CFO, okay, earnings call just getting started. But UPS price hikes push profit above estimates as packages drop. Okay, so it looks like a decline in packages, but higher profit per package. Is that sort of inflationary cost? Remember, we saw that from Coca-Cola yesterday. Businesses are really trying to do their best to push any kind of cost increases through to their customers, which makes sense. Okay, then we've got, let's see if we can get 3M. Golly, I remember 3M was the stock to invest in the pandemic. Everybody's like, they're going to make all the masks. They've got all of them. They have every mask. All right, 3M. Yeah, 3M misses on adjusted EPS 265 versus 295. Well, no, that was year over year actually, a comparison. Net sales came in at 8.8 billion. That's actually a slight beat from 8.73. Their guide came in lower than expected. The midpoint on the guide is about 10.10, and they were hoping for about 10.35, $10.35. Then let's see here. We've got outlook remains unchanged. No, I'm not seeing any companies really say like, oh, we're reducing outlook because we think there's going to be a recession. The only thing I saw was Coca-Cola saying we're going to raise prices because what if there's a recession? It's like, dude, these raising prices are part of the problem. Oh, well. Yeah, 3M profit drops, dented by litigation. Well, okay. So, TBD on the earnings call for that one. How about GE? General Electric. Let's see how they did. These are all from this morning, by the way. Okay, General Electric. See some level of challenges throughout 2022. GE outlook disappointing but not surprising. Get some more. Some customers paused wind orders on loss of tax credit. Optimistic U.S. lawmakers will restore the tax credit. Onshore wind orders could slip into 2023. Expects low single-digit sales growth in Q2. Lower cash burn in Q2, though. Okay. And they came in with adjusted EPS of 24 cents versus 20 expected. 17 billion in total revenue. So much money. Order demand strong, though, although they're watching potential headwinds from China. But order demand still strong, they're saying. And then sees challenges in inflation, Ukraine, renewable energy, supply chain constraints, and COVID in China. Okay, that was boring. Then we've got Raytheon. Ooh, and DR Horton could be interesting. Like, especially when it comes time to read the earnings call on DR Horton, see what they think about the market. Any of the real estate companies are fun. So let's see here. Raytheon is next. Defense contractor. What do we got? So Raytheon cuts fiscal year sales outlook on Russia global sanctions. Yeah, that's really interesting because a lot of people were rushing into these defense contractors because there was war happening. Adjusted EPS comes in at 115. Estimate was 102. It's still a beat. Sales of 15.72 bill versus 15.77. Estimated tiny miss there. Yeah. No. Go back. Hold on. It's not being nice to me. There we go. Okay. Raytheon expects, let's see here, delays on titanium sources, working to replace Russian titanium castings. They make a lot of planes out of titanium, by the way. It's not so ridiculously heavy, and it's quite heat resistant. Supply chain lead times growing from 3 months to 1 year. Gee whiz. Casting glitch delayed 70 plane engines. That doesn't sound good. At least they delayed it rather than YOLO. Yeah, but that's not good for business. So then you've got fiscal year outlook came in at 470, slight miss from the estimate. Probably on those supply chain issues. Okay, yeah, actually, that's exactly what it is. All right, and let's do DR Horton, and then maybe we've got JetBlue. That'll get us a good look into earnings. So DR Horton, cancellation rate 16%. I don't know what their normal cancellation rate is, but that seems higher than usual. That seems about twice as high as usual to me. Let's see. But DR Horton raises sales forecast. Well positioned for revenue growth of 25% this year. Still significant supply chain constraints, but new home demand is still very strong. They actually think that the next quarter home sales will be slightly better on margin because of the supply chain issues somewhat starting to reduce. And they say they deliberately slowed sales in the quarter, and construction timeframes grew by 2 weeks. And then they say, aha, here we go. At some point, rising rates will impact affordability. I like how it's at some point. In other words, like, people are still YOLOing it on real estate. DR Horton says rising rates are eliminating some people from home buying. Yes, it's reducing that excess demand. That's what we have been expecting, a reduction of excess demand. Enphase earnings today. Do you think supply chain issues and high material costs will affect guidance? Probably. You know, Enphase has less supply chain kind of clout than like Apple or Tesla, right? Remember that? And they have been air shipping a lot of their microinverters, which anytime you airship, you really do a little oopsie doopsie to the margin. Yeah. So, okay, JetBlue. But hey, fingers crossed. I like Enphase. Okay, so JetBlue's up. JetBlue has the following to tell us. Fuel prices are delaying a return to pre-tax profitability. Q2. Oh, listen to this. This is insane. Like, it just doesn't make sense. There's a war going on, people. What is this? JetBlue says second quarter revenue is expected to be a record result. People keep spending money. Okay. Capacity flat to 5% higher from 2019. That's capacity, not the actual spend. Series investments to restore customer and crew member confidence for the upcoming summer travel season. Summer travel returns at record levels. Even with a reduced schedule, they expect capacity to grow. Some stuff here about fuel. JetBlue had to act quickly to reduce summer disruptions. Blah, blah, blah. Sounds like a lot of complaining here. A lot of complaining and demand up. That's what I got. We'll read the earnings call later, but those are our initial previews from some of these companies that reported here in the morning. We do have one more, though. We've got 3M. No, did we do 3M already? I think I pulled it up, but I don't think I actually read it. No, that can't be right. I thought we looked at this. Oh, whatever. Yeah. That was the one with the significant litigation. Right. Okay, perfect. No, so that's good. Sherwin-Williams. That would be another one to do a quick look at. And then we'll look at the charts. QQQ down 0.6. Come on, man. Come on. We're going to have another yesterday where we go red at the beginning of the day and then we end up green, like largely green at the end of the day. It's like, start red and green. I like those days. It's perfect for the buy the dip. Okay. So Sherwin-Williams, we get net sales $5 billion versus $4.9 billion expected. How do you sell $5 billion of paint? How many paint buckets is that? Hey, Alexa, 5 billion divided by $30.
Sorry, I don't know that one.
Why? Alexa, 5 billion divided by 30.
5 billion divided by 30 is approximately 166 million.
166 million. If they only sell paint, right? 166 million gallons of paint in 3 months. That means in 1 month, they sell 55 million gallons of paint. You go to the paint shop, you buy 1 gallon, and you're like, oh, I got a gallon of paint to do a project. They sell 55 million, basically, of those. That's crazy. Now, yeah, obviously, you could have 5-gallon drums as opposed to the single-gallon ones and stuff like that. But still, it's just interesting to visualize the single ones. Okay, so forecast was 840 to 880 on EPS. That's on that's non-adjusted. That's actually higher, slightly higher than the estimate, than consensus. Adjusted earnings decline while revenue rises. So probably the supply chain input. Yeah, first quarter profit falls 9.5% on higher costs. Supply chain trouble may be past its worst part. Oh, this is quite interesting. Sherwin-Williams posted a 9.5% drop in the first quarter as higher prices were unable to offset the increase in raw materials and other inflationary pressures. The makers of paint and coatings reported a 7.4% increase in sales, boosted by higher prices. Cost inflation, choppy availability of raw material hurt results. Added the availability of some materials needed to make the products had improved meaningfully. Oh, that's really good. Oh, I love to hear that. Because I just keep hearing bad news about supply chains in China. So we get some good news finally. I don't know. Write that one down. There we go. Shares up about 4% in pre-market. Okay, that's cool. And let me look at this here. Revenue. Company cited strong revenue growth bolstered by sales for performance coating group products. It makes me wonder if that's like epoxies or something like that. Sherwin-Williams Performance Coating Group. Industrial Coating. Performance Coatings Group. Oh, there it is. Okay, what is that? Yeah, that's under the industrial section. So I'm still thinking like epoxies and stuff, but the stuff isn't loading. Well, we know it's under industrial, so whatever. Okay, and let's see. We believe we are through the worst of the industry supply chain challenges, and incremental architectural capacity we added last year positions us well for the upcoming painting season. That's interesting. That's basically talking about how, because we had so many supply chain issues in 2020 and 2021, now companies started adding capacity, and it's actually reducing the potential supply chain issues entirely. Oh, interesting. Yeah, I guess industrial coatings could also be paint coatings. Paint coatings, duh. I mean, automotive finishes, industrial wood coatings, protective marine coatings, so for like boats, aerospace coatings for like planes, packaging coatings. Who coats a package? I guess it'd be like tin cans or bottles or whatever. Metal containers. Yeah. Metal, like cans of Pepsi and Coke. That's interesting. I never thought about that before. Non-BPA epoxy platform technology for food and beverage cans, like Spam and soda cans and stuff. How interesting. Or even like you go into like Starbucks and you get the metal things that have the designs on them. Cool. Okay. Wow. Learn something new every day. So, unless you don't try and you're boring, then you don't learn something new every day. Then you're just boring. Okay. So, what else? Shadow of inflation hangs over corporate earnings. Yeah, okay. Home price appreciation accelerates once again in 20 cities. Oh, yeah, we got home price numbers. Let's look at them. Let's see the year-over-year number. Year-over-year, 20.2% from a year earlier, up 18.9% from January. That means in the last 3 months, prices have actually accelerated with a year-over-year comparison. Just nutty. Nutty. All right, what else do we have? We got BTC sitting at 40,200, back over 40,000. That's nice. Solana's still sitting under 100. Cardano's under 90. Ethereum's under 3K. All right, take a look at the pre-market here. Let us see what we have in the pre-market to see. Okay. So, holy crap. Redfin down 9.6%. How do you fall 9% when you're already at March of 2020 lows? What the HE double hockey sticks happened to the red of the fin? Redfin reports rents climbing 17%. Redfin falls as Piper cuts Redfin to underweight on muted outlook. Yeah, I mean, the biggest concern I personally have for Redfin is the Zillow effect. Remember when Zillow almost probably went bankrupt on the whole iBuyer plan where they're buying homes and trying to fix them up and flip them? That's a big issue for me, to want to own a company like Redfin, because, if you own billions of dollars, $4 or $5 billion worth of properties, and then you go into an era where home prices are falling, well, like, there goes your valuation, because now you're negative on a lot of these properties, right? So that is dangerous. Very interesting, though, that Piper Sandler reduced their price from $40 per share to $11. That's also quite interesting, because I sold Redfin at $40. I cannot believe it's at $11 right now. Oh well. You need not wonder. The Golden Hammer HD asks, I wonder how crypto will do in a recession. You need not wonder. It will do horribly. What video do you want to know about real estate taxes? Enphase CEO said this on the last call. We are quite optimistic that supply will catch up to demand during this year. Do you think this has changed? No, I think that would be a second half of the year. In fact, I believe, if I remember correctly, they said the second half of the year in the earnings call. Though I also have their earnings call. We could just get a quick preview of that, since they are reporting today. Enphase. Enphase. Got it. Enphase. Supply. Operation Global Supply Chain still under a lot of stress. Diligent supply teams. Blah, blah, blah. Our lead times are 14 to 16 weeks. Lead time challenges. Let's see. Price hikes. When do we expect it to get her? Oh, look at this. I expect it to get it better continuously throughout 2022. Okay, so maybe not necessarily towards the end of the year, just continuously. And then price increases in March. That's good. Component shortages, supply chain constraints go away, right? Securing supply. No problems with ASIC supply right now. So we would be heavily ramping the mix of IQ8 versus IQ7. That's because crypto prices have come down. That's actually a good thing that's actually bullish for Enphase on earnings today. The no ASIC supply issues, because they make some nice dollars on those. No, that's good. I'm actually optimistic. All right. We got about 10 seconds to go until the bell here. Let's listen in. Here we go.
China was down again, even though they are going to stimulate. They are the bull side of that story.
The self-inflicted nature of the China, we're going to look back and say, there used to be a question about who lost China from the State Department. Who lost China from China? That is what this story is going to be if they don't fix it up.
It does appear to be self-inflicted. By the way, there are the opening bells and the CNBC real-time exchange on your screen here at the big board. The Arbor Day Foundation celebrating its 50th anniversary at the National.
I don't care about the Arbor Day Foundation. Well, I mean, maybe they're nice people. I don't know anything about it. Anyway, here's your QQQ showing that sort of initial institutional sell pressure right there that we usually get right at the open. This is not a surprise at all in this market. Tesla is actually fractionally green here. It looks like about 0.18%. And so we'll see what happens to QQQ here. So, okay, yeah. So anyway, back to Enphase. That's actually kind of exciting about Enphase. So I'm happy about that. Looking at that earnings call from Q4 leading into Q1. If they don't have ASIC supply issues and they can crank these, that's great. The problem is Q1 tends to be a little bit of a slower quarter for solar deployments anyway. So, but then again, that could also be in expectations. Probably is. Then let's see here. Oh, Jim Cramer was just talking about China. I wanted to add that China's really interesting. Okay, they had since over the last 2 weeks they've had 3 chances to lower their interest rates, their central bank, and they did not. They're really not stimulating that much. Like everybody keeps saying, "Oh, China's stimulating. That's great." Not really. Like not enough to actually get people to spend money. People are so concerned in China, and I think it's because the people are really smart in China. They understand their government is has these huge desires to prove how one party control is so much better than democracy, but they also realize that like you think the numbers are cooked here. What about China? At the same time, there are also now rumors going around that potentially Tesla would have a 20-for-1 stock split, which is kind of wild because if Tesla had a 20-for-1 stock split, it would be about $50 per share. That would make options kind of juicy, make it affordable to the retail investor. But that's just a rumor right now. We don't know if that's true. So TBD on that. All right. Let's see here. Oh, QQQ just took the pooper, and Tesla just fell about 0.5% as well there. Whirlpool, it's up 8%. They didn't actually do that great yesterday. But I think the buybacks were, I'm pretty sure they missed by like 4% on fiscal year guide, but they're doing all those buybacks. So who knows? Maybe they're starting some buybacks here in the AM. But yeah, you've got a nice little rotation here to the dark side. Look at that. It's just getting worse. QQQ now down about 1.15. Tesla down now about 0.7. Enphase down 1.6. Matterport under $6. Trade Desk dropping about 3%, given back yesterday's. Affirm dropping. What do we got over here? On the upside, Restoration Hardware up 5%. Dutch Bros up 3%. Ubiquity, I'll tell you, Ubiquity has actually been a pretty good store of value. It's been stuck around $300 forever throughout all this madness. Whoever's hodling Ubiquity is hodling Ubiquity. Very interesting. So Hippo Holdings is up. Old insurance play. But towards the dark side over here, yeah, that Redfin on the price target cut 8% to the downside. It's actually pulling Zillow down with it, $4 or 4.66%, followed by Roku at about 4.6. Rivian. There were some articles yesterday about Rivian and like potential bankruptcy. Like, oh my gosh, drama. Anyway, let's watch the QQQ as things evaporate a little bit here, and quick peek too on BTC. Yeah, BTC kind of been range bound here for a bit. Let's go to the minute chart though. Yeah, dropping with the open as well. Not terribly uncommon to see BTC sort of mirror what the indices do. Okie dokie. So right now we've got 10-2 spread still sitting at 18.8, 5-year break even. Lowering again now 3.24 on market expectations of inflation, falling, which is very good. Oil's up about 1.6 to 1.7% with WTI back over 100. Brent at 104. Bonds down again. Oh my gosh. Wow. That's actually a big drop there on bonds, on yields. You're now at the 10-year sitting at 2.74. This is substantially down from that essentially 3% 10-year that we've seen. We're now almost 26 basis points under that 3% level. It could be a temporary flight to safety and sort of short covering, short squeezing that you're seeing in the bond market. But, you can't really blame it when the QQQ just decides to fall 1.2%. Twitter decides to fall 1.8%. Tesla decides to fall 1.25% on weenie baby institutions dumping. Okay. UPS does not see any downward pressure on pricing. Domestic package volume to decline in the first half of 2022 compared to the first half of 2021. Let's see. Let's listen to Jimbo. He's talking about yields, it looks like.
Global spending is up across the board. It's coming from Europe, coming from the U.S., and it follows a cycle where it's been lower, unusually, in the last year or so.
Yes. What do you think of that Raytheon quarter? I mean, did you see the engines, the jet engines? I mean, that area.
Oh, that's the casting issue he's talking about. I don't know why Jim's getting all caught up on that. But whatever. Okay, so what else we got? Oh, didn't HSBC report? Let's see. HSBC. That would be very interesting. Let's see here. Maybe get some looks into the Chinese consumer too. Yeah, we've got some info here. Okay, cool. So let's look at HSBC together. Oh yeah, here we go. Okay, so HSBC pre-tax 4.17 bill versus 3.72 expected. Revenue came in. So bottom line was good. Revenue came in at a slight miss, 12.55 versus 12.75 expected. We've got Ukraine war has exacerbated inflationary pressures. We already knew that. Sees wealth business recovering when restrictions were lifted on COVID. Continuing to expect rates of 10% in 2023. That's for China. Potentially paying a dividend. Revenue outlook remains positive. We remain big China bulls, but we will see a slowdown in China in the coming quarters. China housing liquidity issues are beginning to ease. Oh, that's actually good news to see housing maybe settle down a little bit. Yeah, a lot of the cities in China are doing like these special incentives to get home buyers into homes. And people who aren't buying, they're trying to convince to basically buy. Investment bank will outperform in 2022. Labor costs are high. What else do we have? Bank profits slips by 35% as Russia-Ukraine conflict hits. Let's see here. Anything else? No. No, it seems like they're bullish on China with some relaxation in spend expected this year, but still bullish. All right. Let's see what else the suits are saying. Look at that. We did not fall on the QQQ as low as yesterday. Now, very, very common the first 5 to 10 minutes to see this kind of red. I've honestly stopped caring about what the sticks are doing so much in the AM. Mostly, and I mean, I do want to know what's going on. That's why I love, covering the news and such. But the point is, you've seen such like unpredictability in the first 2 hours of the day in terms of how the day is actually going to turn out. That's kind of wild. Okay, so let's see here. Let's see. Sherwin-Williams surging in pre-market as significant pricing actions previously announced in all businesses have not yet fully caught up to elevated raw material costs, and basically more price hikes are coming. Okay. Oh, there goes that QQQ right back to the bottom. It's like just when you thought you were out, they pulled you right back down. Yeah, Sherwin's up about 8.4% here. Probably seen as a little bit of an inflationary hedge as well. Durable suggests CapEx continuing. Okay. Finding venture capital in crypto is all FOMO. Yeah. The inflation will curb European stock recovery. Okay, a lot to talk about inflation today. Persistent lockdowns in China. Yeah, that's where. You know what? Oh, that's a terrible tweet, but I don't know. What do you think? The Chinese lockdowns are transitory, something to that effect. Don't worry. China's lockdown is transitory. It's terrible. Okay. So QQQ now down 1 1/3, Tesla down 1 2/3. All right. So we did earnings. We did that. Let's see what else we have. Yeah, a lot of people like Elizabeth Warren complaining about Elon Musk buying Twitter. Oh, now rich people are controlling communication platforms. Like, so exhausting. Let's see. We talked about the electric Corvette yesterday. That was kind of neat. Although they were pretty clear about making sure everybody knew that don't worry, they'll still have a gas version. Boring. Sherwin-Williams now up 9%. As everything else is kind of trickling down a little bit. All right, let's see here. Just never go to China and you'll be fine, says someone here. Okay. So much weight was put on UPS earnings. Was the beat enough to change market sentiment? No. Packages down, prices up. Kind of not what you want to hear, right? Yeah, exactly. I've talked about the 20-for-1 split with Tesla, the rumors of that. Saw chat comments about buckets and barrels. So I had, well, welcome, investment joy. That's awesome. Why don't you believe in Robinhood? Well, it's not a matter of believing in Robinhood. It's that brokerage revenue I expect really to decline substantially. Yeah, as less, as you're in a poopy stock market, less people are just interested in the stock market. It's just like, whatever, people just tune out the stock market, and unfortunately that lowers brokerage revenue and makes it harder to attract new customers. It's like when you have a down stock market, that's when people are like, ew, why would you invest in the stock market? That's a gamble, that kind of stuff. It's kind of entertaining. Anyway, look at that. Tesla, 975 right now, down 2.2%. Looks like we're just kind of continuing to droppity drop here. All right, let's see what we got on the CNs, BCs.
Arduini, our relatively new CEO, and his team, I think, are doing all the right things to position this company to lead in innovation, to really be at the forefront of precision health. We're going to be able to do that in a way that not only drives the top line, but translates into good bottom line and cash performance. So I think this is a company that people will be excited about. I'm excited about my role going forward as non-executive chair. So we need a little bit of time.
This is too boring. Let's see what Dwack's up to. And yes, HUD 8 is a play on BTC for the person wondering. Okay, Dwack's actually up 5.6% right now. Yesterday it was down 12.9%. All right, let's explore some of the others here. So Redfin, tiny recovery there, but still down 6%. Roblox down another 5%. Nancy Pelosi's husband has $100 calls on this sucker. Calls have just gotten wrecked in this market. And I'm not immune to that. I've also gotten some calls that are just... But that's okay. Larger positions doing okay, even though we're red on the day here. What do we got? Beyond Meat, 4%. Look at Beyond Meat's price, $37. Gee whiz. Oh my gosh. Wow. Wow, this is so weird to look at. Look at this. Beyond Meat had this channel over here between 121 and 140. Oh, you can't see it. Beyond Meat had a channel for between 120 and 140 for the longest time. Really started in about February of 2020 as people got really excited about this. But look at that. Now you're down to $35. That's insane, man. Ooh, look at that downtrend on Norwegian Cruise Lines. I can't even call it a wedge. It just looks like a downtrend to me. Visa 205. The stocks don't want to move anywhere. Costco was one that had been moving though. Did we get over 600? Oh, whoa! Costco just dumped a little bit. How fascinating. Yeah, it ran over 600 and then dumped a little bit. Ooh, I'm going to keep an eye on Costco. Tesla's now down almost down 3% right now. Google down 2.3%. NASDAQ down 1.6%. The pain is real. What is it? Yes, UPS, Google. Wow. I can't believe Costco's come down that much. That's 10% off the highs now. People were kind of fleeing to Costco. I thought it was kind of a fad. I never bought any, but I wanted to. But I hate buying stuff when it's up. Like, I like the pain for acquiring. Okay. So let's see what else is going on here. Why is QQQ falling? No, just talk about treasuries. That's no fun. NASDAQ has now exceeded the collapse or fall sort of the others. You have Dow down about 0.8, S&P down just under 1%, 0.97. All of these were down about 0.5% in pre-market, but the NASDAQ's now tripled that decline to 1.5%. And bond market, 10 years still sitting at 2.74. It's roughly where we left it. Okay. There's your NASDAQ sitting at 324. Keep an eye on that. And Tesla now 966. Tattooed chef somebody wants to know about. $8.45 right now. Wow. It's just an evaporation that we've had. So many different companies. I think SoFi has gotten hit as well pretty hard. Yeah, $6.23 on SoFi. No end in sight on the declines. Terrible. All right. What is this? Let's see. This bear market has legs and it's looking for its next victim. If you're wondering who may be the next high-flying stock to succumb, it might be Tesla. Oh, great. Somebody here writes, I know Tesla beat on earnings last week and Elon Musk projected a bright future of car delivery. Still, he can't fight a deteriorating macro environment and Tesla stock is priced for perfection. That says this individual here, Edward Harrison, writes for Bloomberg. Oh, so that's why you're making Tesla fall. Or that's why Tesla's falling, maybe this person's article. They're comparing to the battering of Facebook and Netflix, losing 35% of their values pretty quick. Nvidia and Tesla would be next, they suggest. Let's see. Nvidia is already down about 40%. Tesla is the one to watch, having fallen by about 20% from its peak in November. Investors in the stock were clearly disappointed by news that Elon Musk had sealed a deal to buy Twitter. I didn't really think that was so terribly disappointing, but okay, because it was down like 0.7% yesterday. It doesn't seem like a big deal. This will be the fourth company, including Boeing and SpaceX, vying for Musk's attention. Oh, the attention split. Blah 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 blah. All right. And then, of course, they put in a little quote. It's funny how here they've got a Bloomberg article, this whole discussion about how they think Tesla's going to fall. And then at the end, they write, quote of the week, Kathy Wood, our confidence in Tesla has grown. Meanwhile, Kathy's actually been selling Tesla. It could be, a rebalancing thing just because so many of the other companies are still falling quite hard. I think yesterday, here, I'll pull up her actions yesterday. It's almost daily that I see Kathy dumping Tesla. All right. So April 25th, dumped 6,800, 1,400 shares of Tesla. Then not on Friday. On Thursday, sold 67,000, 14,000, 11,000 of Tesla. A lot of shares. On 420. 420 and 421 sold 67,000 shares of Tesla. Jeez. Anyway, that was just over the last few days here. And then the money seems to be going into Roku, Shopify, Coinbase, Zoom, Roblox. Ugh. All right. Well, we'll see. We shall see, Kathy. We shall see. All right. QQQ. Still in the pain. 1.65 to the downside. Straight down this morning. I suppose it'd be interesting to compare to yesterday. This was yesterday. It was that's right. We were sort of like more barcoding yesterday than we were kind of going straight down. Like today is just straight down. All right. Okay, U.S. stocks fall after gloomy earnings forecasts. U.S. equities declined at the start of a busy week for corporate earnings as investors are closely watching the results for insights on the effect of inflation and consumer spending. S&P, NASDAQ slipped more than 1%. Treasuries rose. Corporate earnings are providing some solace for equity bulls. Close to 80% of firms have beaten profit expectations, including GE, UPS, Pepsi. However, disappointing earnings forecasts, including those from JetBlue, are weighing on shares. Results from Microsoft, Google, and Visa are still to come this week. Yeah, let's look at the earnings we're going to have later today. Somebody's wondering if Kathy's just rebalancing or if there are outflows. I can find out. I mean, it's tough to tell. She's probably been, it looks to me like she's had more outflows since about the middle of March. So that could be one of the reasons. Yeah, I would say a lot more outflows since March 17th than inflows. But before that, she was having more inflows. So yeah, probably. Okay, so later today, we have Microsoft, Google, GM, Chipotle, Visa, Enphase, Texas Instruments, QuantumScape. Wow, that's a big earnings sesh. Microsoft, Google, GM, Chipotle, Visa, Enphase. That's a big boy. And then Wednesday, we get Boeing, Spotify, T-Mobile, Harley-Davidson, Fiserv. That'll be interesting for consumer spending. Kraft Heinz, Ford, Facebook, PayPal, Qualcomm, Pinterest, TDoc, ServiceNow, Upwork, Hertz, Mattel, Las Vegas Sands. Woo! Cheesecake Factory. My gosh, this Netgear. This week's going to be fun. Or it'll just be like that, where the NASDAQ keeps falling. Oh, Tesla at 948 right now. Look at that. The Bloomberg article has destroyed Tesla. 5%. Zoom. Z. Look at that increasing volume, too. Oh, my gosh. Zoom. Yeah, Zoom down 5% as well. Oh, how entertaining. Very entertaining. Not really. Anyway, okay. So let's see. Top. Okay. What else do we have? NATO would be stronger with Finland and Sweden. Oh, yeah, just what we need. More drama for Russia. Oh, you can also get a little bit of the latest from this morning on Russia, Ukraine. Defense Secretary Austin declared Monday at the end of a stealth visit to Ukraine that America's goal is to see Russia so weakened that it would no longer have power to invade a neighboring state. Wow. President Biden entered the war insistent that he did not want to make this a contest between the U.S. and Russia, rather was simply helping a small struggling democracy committed to keep American troops out of the fight, resisted the no-fly zone, yet Russian war atrocities have become more evident, and Ukraine's need for heavy armor has increased, and the lines have grown blurrier. Mr. Austin's declaration: the U.S. wants to see Russia weaken to the point where it can't do things like invade Ukraine. Wow. Well, their economy is probably hitting that. Yeah. Almost down 2% on the QQQ. Come on. Give me 0%, will you? Don't hold back, market. Give us some more pain. The reverse psychology. Anyway. Let's see. Unclear. Ukraine's railways and other infrastructure are important for funneling Western-supplied weapons and aid to combat zones. Mr. Putin has said he does not consider Ukraine a real country. Russia is falling. Ukraine is succeeding, says Blinken. Okay. I mean, that doesn't look like Ukraine's winning. It's kind of like even if you win, you lose. There we go. We almost got the 2% on the QQQ. We asked for it. I asked for it. All right. What else? I think that about covers everything we've got. Let's see. 3M cuts 2022 profit outlook amid decline in mask demand. U.S. ditches Trump-era policy for Alaska oil reserve. Putin ally says Ukraine is heading for collapse in several states. Poland sees growth slowing as Ukraine war hits the economy. Well, that's also right next door. Some people just refuse to leave. It's quite interesting. Like in Mariupol, people stay. They're like, oh, I don't want to leave. And then, people get shot and murdered. It's terrible. Very bad. Anyway. Okay. Well, I think that about does it. So thanks so much for being here and watching me watch the candles drop. QQQ is now under 320. You've got Tesla down almost 6% on the day after a Bloomberg article just absolutely destroys the stock. Thanks, Bloomberg. Jerks. You can see Tesla heading down here on the retracement. Might be heading for that 38.2, 905 right there. QQQ down now 1.94 as, there's a brief little pause there. Looking at some of the other stocks, we got Roku down 7.5%, Roblox down 7%, Redfin down 7%, Matterport down 5.9%. Yeah, it just sometimes makes you wonder, like, how can they keep going down? But they just do. Anyway, thanks for being here, folks. Make sure to check out StreamYard by going to mettkevin.com/StreamYard. We'll see you in the next one. Goodbye.